After two unexpected rate hikes last week from the Bank of Canada and the Reserve Bank of Australia, what should have been a quiet trading week was turned on its head, confirming that in finance, you can never assume anything and you should always be prepared for the curveball that is just around the corner. That sets up an interesting dilemma for this coming week as the Federal Reserve is back in town, but they aren't expected to hike interest rates at all. But isn't that exactly what we said last week about the Bank of Canada and the RBA? Hello, I'm Nick Quinn, one of the trading coaches from Forex Signals and howtotrade.com, and this is your weekly preview for Monday the 12th of June 2023. As we navigate the coming days, market participants will brace themselves for a diverse range of economic indicators, central bank decisions and sentiment data, with markets closely monitoring inflation trends, interest rate decisions and consumer sentiment. The upcoming week promises to be dynamic and potentially impactful. So let's dive in and explore exactly what lies ahead for the coming 5 days in markets. The data for Monday is pretty light in Europe and the US, but we have got some interesting stuff out of India to keep us occupied. We've got inflation data and industrial production data. It's that inflation data I would want to focus on from a currency point of view. The market is expecting the downtrend in Indian inflation to continue from 4.7% to 4.6%. Rates at the moment are currently stuck at 6.5%, and there's no question that the Indian rupee has been decreasing in value systemically for such a long time now. But we have had over the course of the last 2 years a really good meaningful move in the Indian rupee. That consolidation that we've had since October time, it looks like it may potentially be coming to an end because we have got a very nice technical looking ascending triangle starting to form now on the daily, just pushing this resistance area here at 82.82. That looks like it's going to crumble. I'm just wondering whether potentially we may actually get that happening on Monday. That's going to open the door for a continued move higher. Technically, you would want to use the height of the pattern itself to start to estimate as a measured move where that area of next resistance might potentially be to the upside. That's anywhere from this mid 85 area and upwards. That could be the area to focus on. If we don't get that and we get this doesn't actually work out, we could certainly get a meaningful rejection to the downside, but given the fact that we have systemically been in such a strong trending market in the Indian rupee, I think that I would go with the upside potential on this, and I'll be looking for a break to the upside. We're going to welcome the US back to the table on Tuesday. They've been pretty quiet, certainly the previous week. We've got a lot of data, a lot of emphasis focused on the Federal Reserve this week with the interest rate announcements. But Tuesday will be the printing of inflation data out of the US. And this is the last chance to look at some data before that interest rate announcement from the FOMC. So I'm going to put a lot of emphasis around US markets. I'm going to look on Tuesday as regards to the inflation data. I'm going to look at the US dollar index, and it's actually setting up really nicely at the moment. We actually have what looks to be a rounding top formation on the 1 hour chart here. We're just at the top area of this old support area. We've not quite tagged the top there at 104.86, but you can see the formation of that. Rounding tops are a great distribution pattern. They are slow to form and they start off life looking and feeling like a head and shoulders, but they're a little bit more complicated, and it's showing us that slowly the market is changing and there's money coming back out of the market. Commercial hedges are positioned for a dollar to weaken from here, so it's looking pretty good at the moment. Interesting to see how the dollar then behaves over the course of the week, and Tuesday is going to be the start of that. From a rounding top formation, what we would basically do is use the height of the entire pattern itself to be some sort of a gauge and a break lower, and use that as a measured move projected target to the downside. That's how it would work. That puts a lot of emphasis on this area here. Now you can see I've just put my Fibonacci tool over the top of that area, so there could be some interesting focal points within that whole structure there if that formation was to work out. If it doesn't, and we end up with a stronger dollar throughout the course of the week, and this pattern ends up breaking down, the next target is going to be this upside of 104.87 and then higher all the way up to 105s. The mid 105s will be the next target for the dollar. All eyes will be focused and zeroed in on the Federal Reserve on Wednesday when we do get the FOMC interest rate decision and then also the subsequent press conference. A lot of emphasis, as always, will be put on this. I'm going to focus on the S&P 500 as a market to look at for Wednesday. And you can see here, if I just drop this out to the daily time frame here, you can see that we have had just the most amazing run up in price action. I'm starting to question now whether our theme that's been so beautiful to trade for the last 12 months of being of hawkish and dovishness, whether that is now going to still be a big theme in markets, or whether we're going to move to a more traditional risk on, risk off type thing. I think that's going to be solidified on the Wednesday, depending on what the Federal Reserve do. Now, bear in mind that they are not expected to hike interest rates. At the moment, sitting here, you could say that is probably going to be the game plan. However, bear in mind what happened in the last week. We weren't expecting the Bank of Canada to hike rates, and we weren't expecting the Reserve Bank of Australia to hike rates, and yet both did send in shockwaves throughout the market. So on the off chance that there is a hike from the Federal Reserve, I suspect that the S&P is going to want to price that in very quickly indeed, which would be a bearish play on the stock markets. If we do get that, I'd be looking for the stock market to trade to the downside. We've got currently towards the end of the week, we've got a reasonable looking double top here. A couple of areas that I would want to focus on to the upside would be 43.34 before I get a meaningful retrace down to the downside, and then from there I'd be then focusing at the bottom of this leg here, all the way back down to 41.05. Is it possible to do that within a week? Yeah, I think it's certainly possible. Are we going to get it? I don't know. It's all going to depend on what Jerome Powell says on Wednesday. Volatility is expected to continue on Thursday as our attention is focused on Frankfurt, and the ECB is expected to hike by 25 basis points. I think they potentially will do that. That will obviously bring the euro into focus. You can see it here on a daily time frame. And we've also got this beautiful looking channel now formed here, giving us a range bound play with a slight bullish lean to it, but it does look pretty good. That bottom area here is going to be super focused by the time we get to Thursday ECB press conference. So it's going to be interesting to see how that actually works for the ECB. I think they will do 25 basis points, but we have got a backdrop of disappointing growth together with some declining inflation as well, and the general gloom as well. So for the ECB to continually be hawkish, that would lead to a weaker euro, but I suspect that the more that this goes on, the less effective that hawkish dialogue would be. So that would give us a sense of rotation back into this channel. So really the key area I'm going to focus on is that mid distance point here, which would bring us in around about the late 108s up to the 109s, 109.20, something like that would give us that midpoint. If we get there by Thursday off the back of an ECB which has maybe given up trying to sound so hawkish, that could be a nice inflection point for the euro against the dollar. Bear in mind that the ECB still do not want the euro priced higher than 110. Currently that seems to be working quite nicely for them, but everything will depend on Thursday. By the end of the week on Friday, I suspect that most traders will be suffering from a sense of fatigue because it will have been a busy week. That can usually actually lead to one of two things. Usually, it can usually be an incredibly thin, volatile, choppy session, or it can basically be as flat as a pancake and we get no decent action. We have got Michigan Consumer Sentiment, which is one of the oldest sentiment readings that we get out of the US. That is on Friday, so there will still be some opportunities left on the card, and that is data that we certainly need to be paying attention to. There's no question about that. By the end of the week, if I would then want to look back at the various different markets, we have put a lot of focus on the US during that week. Looking at the Dow as well for Friday, that day, this trend line here, there's a lot of compression sitting underneath this trend line all the way from November last year, and that's contained our current price action for the whole year so far. That is looking compressed. It is looking compressed. I suspect that this week is going to be a make or break for the stock market now. We're looking for some clear direction. This is our yearly high at the moment on the Dow. That's 34. 515. So we're not too far off that top, but I am looking to play the stock markets to the downside. So in this instance, depending on what's going to happen with the FOMC and obviously what happens throughout the course of the price action for the week, I'm looking for, this is like make or break now for the Dow. This trend line has to tell us which way the market is going to go. So if we're going to move to the downside from here, that would be the way that I would think about the markets. But I'm looking for this to hold as a very strong level of resistance. We keep bleeding and compressing it against the top of that. It's only a question of time before it's going to crack, and they're going to be looking to push right back up against those yearly highs in short order. So as we conclude this week's economic outlook, it's clear that several factors will command our attention in the days ahead. Market participants will closely scrutinize inflation data, seeking insights into economic stability and potential central bank actions. Central bank meetings such as the FOMC and the ECB will offer valuable clues about future monetary policy direction. Additionally, the sentiment of consumers, a vital driver of economic activity, will be gauged through releases like the Michigan Consumer Sentiment numbers. With potential implications for financial markets and investor sentiment, staying informed about these key events will be crucial for navigating the ever-changing economic landscape. Join us in the trading room every day next week when we will track these developments and keep you informed for what is set to be a tense week ahead in the markets.